Hello, everyone. My name is Nick, and I wanted to talk about the state of the market. So we're going into Friday, March 20th tomorrow, and the market's been a little choppy. So I'm sure you've probably heard by now because I've heard it everywhere. I've seen TikTok videos, I've seen YouTube videos, I've seen people posting about it on Instagram and Twitter about Quadruple Witching Day, which is happening tomorrow, and how there is going to be fear because of this, and essentially that there's just going to be crazy volume, which translates into super volatility, which is something that I just frankly I look back at the four previous quadruple witching days, and I'd like to go through them with you guys, but and I don't see it, so I'm going to go through that here. Um, the four previous witching days, and like I would like to say, just it's not really a time to panic. That quad Quadruple Witching Day is just something that happens four times a year when it's just an alignment of perfect dates in which options, market futures, market index futures, market options futures, stock futures, and stock options, they all expire on the same day, which just leads to more buying and selling in the market. And so, really, it doesn't have a correlation with pricing. Volume should not have a correlation with pricing. And that's what I believe to be true. If you have 10 people selling to 10 people, and each person has their own, let's say it's a loaf of bread, and if each person is selling a loaf of bread and there's 10 buyers and 10 sellers, then you have market equilibrium, right? The 10 buyers and the 10 sellers will the market will determine what the going price is for whatever commodity is that they're selling. The same is true if there's 20 sellers and 20 buyers, as long as each person who is selling something has an item, has a loaf of bread in this example. The same result will happen. Market equilibrium will be achieved. So I just wanted to look, and this is just Webull. This is kind of what I use. So right now, after hours, it's pretty red. We have a lot of stocks that are down pretty bloody. We have Upstart, which has had a crazy day today. He was up, 90% or something crazy like that. Partly, I think it was because of their acquisition, or their talk of acquisition with Progeny, which is basically a really cool software system for auto dealerships. It's really going to help Upstart, which is more of a financing company. They give loans, and now they're going to be stepping into the auto loan space, which is going to be exciting for them. But yeah, I just kind of wanted to talk about what I would do in this situation. I mean, what I'm paying attention to in the market right now is bond yields and the treasury yields that have been pushing the market down, and that's kind of what I've noticed is that as the bond market is fluctuating, the automated trading systems are reacting. So if bond yields begin to start to drop, we're going to see a reversal, and the market's going to go up. If there's rapid acceleration in bond yields, then that's going to push the market down. And each time, the automated computer trading systems are going to be like, okay, bond rates are going up, we need to sell. Bond markets are going down, we need to buy. And it's just going to go like that, back and forth and back and forth and back and forth. With that being said, with such high volume tomorrow on Friday, the last previous four quadruple witching days, if you look at each one of them on March 20th, which was at the March 23rd was the bottom of the 2020 market crash. That was the exact bottom of the market, and so this is about 2 or 3 days before the bottom of the market, and the Nasdaq was down 4%, which is fairly significant. If the Nasdaq is down 4%, that means your stocks like Tesla, which have a very high beta in relation, uh, were probably down 10, 12%, meaning that it was pretty bloody. Um, and that was really of the previous four quadruple witching days. March 20th was the only one that was pretty bad, right? The next one was on September 18th, and that the market was down. The Nasdaq was down, I think, minus 1.13%, which is not great, and no one likes that, but it's definitely not a crash like they are making it out to be, and kind of the fear that's circulating right now all over social media. And then on December 18th, one thing I noticed is volume tripled, 3x. So it's 100 million volume to 698 million in volume by the end of the day, which is insane. That's an insane volume hike. But on the day, the market was only down by 0.11%, which is absolutely nothing. I mean, you don't even notice that. So I just really want to highlight that there is no direct correlation between volume spikes and pricing. You might get some short term, and by short term, I mean 30-minute, maybe 45-minute fluctuations because of high volume, but that's only if it's targeted at a specific commodity, a specific stock, a specific derivative, but not just at the whole market, because options contracts are expiring at the same time as stock contract. Like, it's just not going to happen. But as a market strategy as a whole, right now, what I am doing, and I would recommend, obviously this is, do what you do at your own peril. This is not, financial advice. This is just my opinion. I have been buying the dips. So I'm stockpiling cash and I'm buying the dips. So trying to increase my stock positions, but at prices that are affordable. And it's hard to do when prices are so high. And one stock that I've been really waiting. I've been waiting for this stock for a while. I've wanted to buy. I love this stock. I love Enphase Energy is the stock I'm talking about. It's been beaten up very badly over the last month, and specifically over the last week. But if you can see, I mean, it was trading at 185, and on the 28th of February, and then by March 7th, it was trading at 132. That's a $57 drop in a 8-day span, and that's just crazy. So I had originally bought some Enphase at 166. So I had bought it on February 1st, and I want to add to this position. I have about 3,000 in this position. I want to make it about 10,000, and I really wish I would have bought here. I added some, but I didn't. I added about $1,400 in Enphase Energy stock. I should have added more. Just a great company. This is going to be a key player in battery manufacturing and supply in the EV market. It's microinverters, AC battery, all of that is going to be just incredibly vital to the growth of the EV market. And I'm trying to position myself for that. Another stock that I really, really like, and I want to get in at lower prices, it's a little high for me right now, is Open Door. It's relatively cheap, which is nice. And it's a platform for real estate, kind of like a Zillow. But what's really cool about it is they get cash offers directly. They don't have real estate agents. They don't, it's complete Amazon of selling and buying homes. And so it's a really cool app, and it's on the rise. And I bought in at $14, and I bought 1,000 shares. And I'm trying to continue to add to this position, but I had previously bought some at $28. And now obviously it had a great run here where it, was up to 36, but then again, that March 7th and 8th, when we had that significant pullback, it dropped all the way down to $19. And I did not buy any here. I wish I would have. But you live and you learn. Just going to keep adding to this. This is kind of my long-term play here. So I have, Enphase and I have Open Door. Those are two stocks I absolutely love. And I'm going to continue to pile on. And just every time that the market dips, I'm going to back up the truck and load it up with this stuff, right? Just continue and continue and continue to add to my long-term positions. And then I want to go over one other stock that I really like. And it's not, a tech stock or anything like that. It's actually a real estate investment trust. And I absolutely love it because of it's a value stock in the sense that I know Apollo Commercial. Like I know what they do. They make money by issuing ABS or asset-backed securities. They bundle mortgages and they sell them, and they finance real estate ventures all across the United States. It's a pretty established company, and what I love about it is it pays a dividend. I think of 7%. I'm not sure. I don't know why the dividend is not showing on here, but it does. It pays a dividend. Maybe it has at least a 6% dividend. And so I bought this. I timed this one perfectly, and I was able to buy in March, and I bought 1,000 shares at $6. And now it's at $15, and I want to keep adding to this so that I can increase my position and continue to get that nice dividend. I'm earning about $450 a year in dividend income just from this stock, ARI. Another one I'll look at real quick with you guys is it's another real estate investment trust, and it is MFA Financial. So this stock I bought at $1.20. Again, I bought it last March. Here, I bought it on April 2nd, and I got in at $1.09, and I bought 500 shares, and it was kind of a risky investment, but the company had shown that they are able to bundle loans and residential loans, but they deal with mainly credit impaired, non-performing loans. And in the midst of a global pandemic, that did not seem like, a sustainable business model. However, in their last two earnings calls, they've actually surprised. They've done well. They've kind of changed the direction that the company is heading. They've had a management change, which seems to have been key. And the stock has continued to go up. Not only that, which I've enjoyed the appreciation in the stock price, but not only that, they've actually they've now issued a dividend. So they're issuing, it's a small dividend, but they're going to be issuing a dividend. I think it's effective, forward year yield 7.04% or a 7-cent per share dividend, which is great. So it'll be March 31st. So I will get that, and that will be awesome. And this is just if your budget is not super high, you don't have a lot of cash to play with, but you want to, get a good value for what you're buying, this is kind of like a great stock to own and something that has worked for me. And then one more that I like that's a real estate investment trust is New Residential. And these guys specialize in managing residential real estate investments and servicing the debt on those, right? So they'll invest in servicer advances, real estate securities, residential complexes, apartment buildings, that kind of thing. With the housing, the way that the housing market has been working, it's actually not been great for New Residential with home prices going through the roof and all of that. because their expenditures are now higher and they have less cash flow. But even with that, I got in again in beginning of April, and I got in at about $5 a share. So I've doubled my money on this, and I'm going to continue to hold. The company does also issue a dividend, about a 3 or 4% dividend, and it's an income producing stock. So the last three, ARI, NRZ, and MFA, are great if you're looking to park 10 or 15,000 or whatever your budget is into a stock, and you just want a good stock that's going to appreciate in value. You're not going to get rich off the appreciation, but you're going to get nice dividend income that you're like, okay, yeah, that's nice passive income. And you're not worried that the company's going to become financially insolvent or you're going to lose all your money, right? So these are solid, sound, financially performing companies that have real growth potential and are going to pay you just to wait it out and invest. So these are just some of the companies that I like. I'll continue to share with you guys. I like your feedback. Let me know any other videos you guys would like me to do on other stocks. I can, tell you, go through, I can, put out my portfolio for you guys, actually go through my entire portfolio with you and show you exactly what I own and then kind of talk about why I own what I own. I would love to do that. So, yep, everyone, thank you for watching. Thank you for listening. Please subscribe, hit the like button, and have a good one.